Welcome everyone. We need to talk about cycles today. So my name is Lars von Thienen. We meet here once a week, every Monday, same time, same place. We are live today, so thanks for joining me. I see we have, you're already watching the show. So as we are live, I will answer your questions at the end of the session in the chat section. What I want to talk today is about a very important topic. The key theme for today is, how do I use the cyclic information we get from our knowledge in regards to cycle analysis in the area of technical analysis on the price chart? So how do I transfer the information about dominant cycles, which we show here on the channel, how to do this and how to derive this? How do I transfer this knowledge, or what can I do with this information on my technical analysis on the price chart itself? Yeah, so that's the key topic, because it's so important that we don't just trust the cycle alone. We need also to apply, if we do market analysis, our technical analysis, so that cycle analysis is never just done alone. So let's get into it. That's the topic for today, the one and only topic for today. One session, one key theme. So let's get into it. I will use the current price action of Bitcoin, to address this topic. So if we, before moving into this specific topic in detail, let's review the current price action and the cyclic behavior in Bitcoin. This is what we are often doing here. Today it's not about the cycle analysis in Bitcoin, because there's nothing new to show in regards to the cycle analysis. But you might ask, how does the cyclic information help me to time my activity, my trades, my risk management, my position management, my trade entry, trade exit management, which is happening on the price chart and not on the cycles chart. And therefore, I will combine two things: the knowledge on how to use it on the price chart, and second, let's review it in the current context of Bitcoin price behavior. Right? So that's it for today. So the first thing we need to do is we need to switch to our cycle analysis first, because we need to know what the dominant cycle in Bitcoin is or is not. So therefore, let's switch to the Bitcoin cycle analysis. And first, let's get an update on where we are in regards to our cycle analysis on Bitcoin, right? So therefore, let's review this chart for a second, even though I will not go too much into the cycle analysis. I've done this lots of times on Bitcoin, so just a quick review where we are in regards to the cycle. So before activating whatever cycle, this is the current price behavior in Bitcoin. We talked here about the important low in June. We showed the projection into the a period of October. And during the last weeks, we discussed here if we have reached a top or not. And there have been two main cycles which we discussed here. So, and they are even visible in the spectrum. Or first of all, if you start with a fresh Bitcoin analysis. So let's start with fresh Bitcoin analysis first. Which just will give you the last 3 years of price action in Bitcoin. So this is the starting point for your analysis. And as I always tell you, and I can't repeat this even often enough, is if you have this more or less, now we have a cyclic behavior on the price chart, but if you just have historical data which more or less includes one trend, it's hard to derive any cyclic information. So we now have a first cyclic behavior here, and we see one longer peak, which is condensed in a very flat peak in the spectrum. So therefore, if we see this kind of feature with a very flat peak in our spectrum analysis, we need to be careful. But we know from historical analysis that cycles with a length of 200, which is a peak which is now wrapped in a kind of longer term cycle, play an important role. I will come back to this in a second. And the key cycle, at least, which shows up here, has a length of 281 days. So the standard procedure would be to add them. And this is what I've discussed here with you during the last week. This single cycle here suggests or has shown us that maybe the peak will extend into the future. Yeah, so the 281 cycle, which seems to be on the latest behavior, so we have morphed from a cycle of 200 days into a longer term cycle, just analyzing this time frame, which gave us no real clue if we have approached the top, yes or no. And therefore we need to combine this with technical analysis on the price chart. So I just want to start here so that cycles are not the holy grail alone. You need to combine this because it would have been a misleading information just trusting this cycle here at this point in time because the high was now in at this point in time. So therefore, we need to add more data to the historical data, which we can just load here. So let's add the 5 years of historical data to our price chart, which you see here by the light blue. I will now extend the analysis on the full price data. It goes now dark black, and let's review our spectrum here, where you see now if we analyze more data. First, what's important for me here, and that's the reason I report this to you, is the cycle with a length of 200 bars. And if you've gone through this historical analysis of Bitcoin, the cycle with a length of 200 bars is very, very important, analyzing all parabolic extreme moves we have seen in Bitcoin. Yeah, and we saw another important move. Therefore, the cycle of 200 days is very important also here, and it is still visible. Yeah, this is not an analysis from the past. So this is up to today's period, just using full 5 years of historical data. And we still see the cycle with a length of 200 days, but it's now wrapped into this 233, 290. So these are the two longer, which then get into the flat spectrum peak if you just use the 1 year. But anyhow, what you should do in this case, you should check what these different cycles would give you for a conclusion. So in regards to the current price action, the 230 something suggests that the top is exactly in the October-November period. Analyzing the 199, the peak should have been arrived already in October. And the longer term cycle, which I showed you also with the 280, is suggesting the peak should come a little bit more later. So there we are now. We have at least these 3 dominant key cycles from a cyclical point of view, which could use, but when does the top really happen? So cycles don't give us a final clue on the exact day here. For sure, we can now create a composite out of all 3, which is also good, but we never know which cycles we should put into a composite or not. And we know more about after the fact, but this will not help us if we want to analyze markets ahead of time and doing projections. And that's where now technical analysis comes into play to fine-tune the exact points in time when to expect a top and when to expect a low based on this cycle. Because the conclusion anyhow is, even though we don't know the exact length and we don't know the exact window when a top or low should happen, we know that we have a dominant cycle with a length of 200 something days. Anyhow, this is up to the current analysis. Nothing has changed in this point here in regards to this. What cycles give us more or less a window, yeah, from October, this point here, to the longest one until December. So in the period October to December, all these 3 cycles peak, but just using cycles, it would not help us to time the markets here. That's also a shortcoming of cycle analysis. So I don't want to tell you cycles are the only truth here. You need to combine this information with other data set or indicators or knowledge or whatever you know about global markets. But, and this is what we always talk here, these cycle analysis indicate or project possible windows of time or points in time in the future where a turn could be expected. This does not mean it needs to happen. And second, we don't get the projection up to the day. So therefore we need to drill down and I will not go to shorter time frames now. This is another method. I will now switch to the price chart now with you and give you an idea on how to use this information on the price chart to fine-tune the tops and lows. Yeah? I think we are analyzing global markets here, and this is cyclic information now using on the price chart. Therefore, it's very important that you add now another technical analysis methods into your mix here. So, okay, let's leave our cycle analysis just with the knowledge about we have the dominant cycle around 200 days still active. You can go back in time. This was the case. So the projection we did in June, July here showed us, and just one time here, let's go back to this point in time here. Let's go back in time here to this point in time. And here you see the cycle with the length of 200 days, which exactly showed us this entry point here, which we did. And then now we are now asking ourselves, has the top already happened or not? So therefore, let's now switch to the price chart. In order to do this, I will now, just for this example here, I will use the free charting tools which are available on TradingView, but you can use any other charting platform. And I'm sure you have different platforms which you can use for that. And it's the same procedure. So this is not just related to TradingView. It's just a free platform. And everything I'm showing here, you can do on your own with free tools now on TradingView, and I will show you that. So there's nothing special here. It's just knowledge which can be done with freely available technical analysis tools here on TradingView. Just said upfront here. So first things first, let's start with the, let's hide this indicator here before I will explain it. Let's first start with the simply long-term weekly chart on Bitcoin here. And I now want to talk about how we use these technical analysis and combine these with our knowledge about the dominant cycles to put this here now onto the chart. Therefore, I will use a standard or an optimized RSI relative strength indicator here. You can use any indicator or your favorite indicator, whatever you like. So I'm using just the relative strengths because this now gives us a kind of indication about the price strength on the market. That's the purpose. I will just use an optimized, this is how the optimized version looks like. It's a cyclic smoothed indicator. It's freely available. It's just using, and if we can, if you want to compare this to a standard indicator here, just as an intro, relative strength index. So you can compare these ones here. So the upper one is for sure more smooth than the lower one. So down below you see the standard RSI indicator. The upper one is a smoothed one, which makes identifying of signals, so trigger points, much more clean and visible. And you see the bands are dynamic. So in the normal RSI indicator, you use this static oversold overbought bands. These are dynamic bands, which also adjust to the dominant cycle here. This indicator is open source. It's freely available on the platform. Even the code is there. So it was programmed by me or by us. But if you like to go into the code, I just want to show you, just search for the RSI cyclic smooth, which is just shown here. So just search for this indicator name on TradingView, RSI cyclic smoothed. You need to use the version 2. There are 2 versions. So this is named version 2. It's free. Even the code is open source. So feel free to dig into the codes. But today I will not speak about the details of the code and the smoothing here. So I will now phase out the standard RSI. And you can use other indicators as well. There's no special secret here on that. So, but now, how do we bring in our cyclic information here now into this indicator? Because that's the topic I want to talk about. First of all, you are aware of that every indicator requires a dedicated setting in regards to the length. Yeah. So have you ever thought about what length information you set for RSI or whatever indicator you use? So because you need to tell the indicator what time span should the indicator use for the historical calculations he's doing. And nobody thinks really about, what do I enter in this? And most just randomly enter some data here. But now you want, whatever technical indicator, you want your indicator to be in sync or in harmony or in rhythm, synced with the market behavior. And we know what the major rhythm of the market is. You know, nominal cycle of 200 days, still active. So therefore, this is a weekly chart. We can, and as Bitcoin is traded 24/7, so this is a real calendar days, we can convert it into weekly lengths. So if you calculate or recalculate 200 days divided by 7 days of a week, you get 28 weeks. So the weekly cycle is 28. And now the important thing is to fine-tune your technical indicators. You use half of the dominant cycle. Yeah, so a harmonic of 2. So divide the length of the dominant cycle by 2 and use this as input setting for the length of your technical indicators. In our case, this means that for the weekly RSI, or here smoothed RSI with dynamic bands, we use the input of 14 weeks on the weekly chart, right? So this is what I've just done here. Press OK. And this adjusts the bands, so whereas the threshold for oversold overbought, and it smoothens out the indicator, which gives you a more clean visual indication here. Yeah, now I make the indicator much more lower. I mean, we are on the weekly size here, and I will not talk about the historical period, but the interesting period from a long-term analysis is always when this technical indicator reaches its extreme situations. And for the relative strength index, the extreme is defined once the signal crosses above the upper band, right? I mean, this is nothing new. So you need to refer to whatever is defined as extreme using your indicator here. So if we know from the weekly perspective that after the 18th of October, yeah, and this is what is shown here on the chart. If you see here just at the bottom of the chart, that's the 18th of October. That's the point when the indicator crossed above the level. So the threshold level of the upper band. So this is not the triggering now, the signal or the top, but starting in October, the weekly price action based on the dominant cycle length of 200 days converted into 28 weeks showed us that from the price activity, we have reached an extreme now. And this is where we always should be on alert here in that case. So, and maybe you remember, this was also the projection of the first projection we did in June, that the cycle should top in October, beginning of October. Yeah. So therefore, the price action now showed us be on alert. I mean, this is not this is not triggering the turn, but from the price action, we would have been aware of the situation that starting 18th October, the weekly price indicated us we are now in the window where price has reached an extreme point. This does not help us anyhow in time this, but this is now you break down your charting time frame one level lower. So this is kind of multi-time frame cycle analysis, cycles within cycles on the price chart. So therefore, let's switch now to the daily price chart here. Just switching to a daily Bitcoin here. So this is the daily price chart here. And now we use the same indicator for this setting here. What we need to do is, for sure, we need to adjust, again, we need to adjust the length setting here, right? Because now we have daily cycles. So what cycle length do we need to enter here? That's the question now for the audience. You need to reply, sorry, this one here. I want your reply now in the live chat section. Without an answer, I will not continue. So I will just now monitor the live chat. Hopefully you will find an answer. So Pete, Juan, Dale, whoever is now live, you need to tell me which length setting do I need to put into this indicator length field here. Just remember, we're talking about dominant cycle length of 200 days detected. I showed you on the weekly cycle how to do this, how we get to the 14. So what do I need to enter now for the daily cycles here? Happy motoring, thank you, 100. That's exactly what I wanted to hear from you. 200 days nominal cycle length divided by 2 to tune your technical indicators, we get to the 100. So I will enter now 100 to change the length setting. We need to wait a little bit for the recalculation. And now you've seen that the bands and the signal now has changed because we have switched the length setting from 14 to 100. Okay, I will zoom in a little bit that we have a little bit more price behavior on the daily chart here. What I would recommend anyhow, you can go back into the past where you see the indications of this indicator, but I will now move to the current behavior. And as you know, we are looking for since 18th of October, so let's say, so the weekly price action told us that starting 18th of October or the week ending the 18th of October, we need to be careful here. So the Friday of the week, so 7 days later. So let's look this up to be now, I just need to look up the date. So the 18th October was a Monday. So the week ended on the 22nd from the weekly. So on the 23rd, we had the signal on the chart here indicating the bar on the 18th. So on the weekend following, so 22nd, 23rd. So somewhere at this point in time here, 23rd. So at this point in time here, the weekly series showed us we are the price extreme. And now you drill down to your shorter time frame. And now we have tuned the same here. And now we look for the trigger here now on this indicator, right? I've now zoomed in here the situation, or even also to see the time axis here. Let me see if I can get the time axis also in here. Yeah, not really, but this is what you see here. Now you see two peaks on the indicator plot here, and now the extreme situation. You see the divergence, which is a very strong signal. Thank you for mentioning that, Juan. So, and second, you see when the signal line crosses below the upper threshold, that's then the trigger. So if you go above the situation, then you are on alert. And when it crosses below the upper band, which is, I need to mark it somewhere here. So which is happening here. Oops. Here. Oh, maybe I should use a different arrow. Here, right? So at this point in time, this is where the signal gets triggered, because then the upper band was crossed, and the divergence, also to mark the divergence here, because you are right, this is how you read the indicators here. This is the divergence on the indicator. Let's make the signal more visible here on the, and let's also mark it on the price chart here. So what you can see here on the chart now is we have a divergence between the two peaks. And by the way, this is very good visible now. And that's the difference. If you use a standard RSI, you will have a lot of wiggles. You don't know where to put the divergence in here. So the smooth one gives you the chance to see the divergence much more clean. And now then second, and this is what I wanted to highlight here, then the key signal comes when the signal line crosses below the upper band. Yeah, right? And you know from the weekly series that we are in this period of extreme price behavior anyhow. And you know from the cycle analysis we did even earlier, you've been aware of the situation that somewhere between October and November, maybe early December, the cycles point to a possible top. And now we analyze price, not cycles, to fine-tune that. And I think now we have the clear indication if you would analyze or doing these technical analysis at each point in time. Here, yeah, let's make it visible here on the chart or with the vertical line. Or maybe here, I think that's the right. Well, let's do it correct. So this is the timing point here when now the indicator triggered our signal here, right? So, and now you have it. So that's not the main topic of doing here the. Forget about the information box here. It's just the timing I wanted to highlight here on this indicator. So that's now the key important takeaway, or the topic I want to emphasize in today's session, that this was only able to fine-tune this by this exact amount if you tune the technical indicator with the length of the dominant cycle in the market. So without knowing the dominant cycle, you would not have been able to fine-tune your technical indicator that way. So for example, if I just go back to a length setting of, I think the standard setting of an RSI is 13 or something like that, you see it here, how there is no real signal here. It's wasted time to use a RSI indicator to really find the point here. So too much signals, too much whipsaw trades. You don't know where to align the divergence here. I mean, this is even a smooth one, but or now let's add the RSI standard indicator here just for fun, or to close this. So if you don't know about the idea how to combine cyclic information and technical indicators, that's the standard RSI indicator. That's what I said, too much tops here. So wobbling indicator line, that's a top below the threshold line here. So don't know. I mean, where's the divergence? Is it already beginning November, end of October? Too much peaks could be selected for the divergence here. And there's no clear signal in breaking down the threshold. The signal was maybe here, but then we moved up. So I will stop here. So a normal RSI indicator, without tweaking it correctly to the dominant cycle, is worthless. But if you transfer your knowledge about the length of the dominant cycle onto your price chart and apply technical analysis, and this is not only bound to the RSI indicator, this is more or less every indicator which requires historical calculations, which more or less every indicator requires, you can set the length setting. And you will see a complete different picture on the price chart if you apply this knowledge. So therefore, it's not only key to find the dominant cycles on our cycles app. I mean, the key point is if you know the length of the dominant cycle, you can use this information in different ways on your technical analysis routine. So this was just one example or one way how to do this. I showed it to you on Bitcoin because we discussed here from time to time how to interpret the cycles on Bitcoin and if it's the top or not. And I mainly referred to our cycle analysis because we are not here to preview or project really market recommendations. But I think now you get a clue on what you could have done to fine-tune your market analysis, while the cycles don't give us this exact fine answer. And this is what I think a lot of you are looking for or claiming as a negative in regards to cycle. It's so uncertain, you get different cycle length, I don't know which cycle to follow, so therefore I often receive the feedback, I can't trust cycles, but because I could choose this one or that one, I don't get a clear recommendation. Yes, that's true, but if you combine now the knowledge of different areas, at least this is one way how you can use the knowledge about the length of the dominant cycle to use this information, to fine-tune your technical analysis. And now ending the session with a statement, that's what Edward Dewey, our founder at the foundation, always said. cycles alone is not the holy grail, but every other methodical framework which is not taking serious cycles is an incomplete technique. So that's the key finding here. So if you're an expert in whatever, Elliott wave, Fibonacci levels, technical indicators, that's good, that's perfect. But if you ignore cycles, your method is also incomplete. And I think this session should help you to think how you can make your whatever approach or method you like, maybe make more complete in putting cycle analysis into your toolset tomorrow. So that's it for today. I will now take a look at the questions we have today. And for sure want to answer some of your questions. So if you have not, feel free to enter your questions. And I think at least you gave the correct answer with the 100, so that's nice. I see you're following me here. So major 100 divided by 2. That's correct. Do we know how many peaks are going to be until the breakdown? Not from the analysis I showed you. So if you want to get an idea, you now need to get one time frame lower. So I would recommend using 2-hour charts. So maybe not lower. If you go below 2 hours, it gets very, very, then you are intraday topics. But if you're fine-tuning how much tops or bottoms might be expected on the way lower now, the 2-hour chart is the way to go. And then you need to repeat the same procedure. So analyze the cycles on the 2-hour chart. You can also recalculate the 200-day cycle on a 2-hour time frame. So therefore, you don't need to detect the cycles on the 2-hour chart. You can recalculate the length, as I did from the 200 daily to the weekly chart. You can also convert it the other way around, what the length of a 2-hour cycles chart is, to use that. And then you can fine-tune, for example, the RSI on a 2-hour chart based on this information. And then you see on the way down, I would wait for once the signal line of the indicator crosses below the lower band, and then turns up with the signal crossing the lower band. That's the standard procedure you would follow on the indicators. And if we are not below the lower band, then we have not reached the bottom from a technical point of analysis. So that could help you, Mario, to analyze now on the way down how many peaks, even to the downside or to the upside, may see. This does not mean that we see a major breakdown, so nobody knows that. And even the cycles, the amplitude does not give us an indication on how sharp the turn will in regards to absolute price movements. But Mario, I hope at least this answers your question. And maybe if we now switched a little bit to the price analysis, I have to make a big announcement here. So if you have watched the session of last week, I've also introduced the concept of Peter Eliades, where he is using the information from the Hurst model, or the nominal length of cycles from the Hurst model, to do price projections on the cyclic information. Not related to Bitcoin, to the global markets, there's also an interesting situation happening. And Peter agreed in 2 weeks from now to appear here on the channel with me together. So on the 13th of December, in 2 weeks from now, Peter will be here on this live channel here, live on the show, and we will discuss his cycle analysis method, which he used also to do in the public session. And we can discuss a little bit the combination of both analysis. So save the date, 13th of December, here live on the channel. Don't miss it. And last but not least, you can really do us a favor. If you like what we're doing here, I mean, this is free. We are non-profit. We are pushing this out here. Like the channel, subscribe to the channel, recommend this channel to your friends. Even the technical analysis indicators I showed you, it's free, it's open source, use it. But even though we need to become larger and need to grow as a community, this helps us also as a foundation for the study of cycles being able to grow. So even if you can't donate or don't want to become a member, you really can help if you recommend this channel here, because our audience will reach, and even this helps us a lot. So thanks for doing that. So let's come to an end. Thanks again joining me today. We touched the 30-minute point for today. I would love to see you next week here on the channel, and we will observe the markets, and then I will bring back some activities on the channel. Thanks for listening today. Bye.